Please welcome Brock Pierce, Chairman, the Bitcoin Foundation, and Bloomberg's Erik Schatzker.
Hello again, everyone. I've been looking forward to this. Brock is something of an expert in pattern recognition, and Brock, you wouldn't know it, but you actually find yourself in a pattern. We closed out the New Economy Forum in Singapore with a conversation about crypto. It was with CZ, whom you know well, the CEO of Binance, and here you are, the chairman of the Bitcoin Foundation, closing out the Bloomberg New Economy Gateway Latin America. Thank you for being here.
Well, so glad to be here, and I'll make sure to send CZ a picture and let him know that I'm filling in for him this year.
Brock, the obvious place for us to begin, it's so obvious, is the spectacular collapse last week of Terra USD, which together with its counterpart Luna, and this stuff is going to get a little weedy, folks, constituted an exotic type of cryptocurrency called an algorithmic stablecoin. And I bring this up because, in addition to being the chairman of the Bitcoin Foundation, you are a legit crypto pioneer. You're the father of Tether, another variety of stablecoin that claims to have enough cash and highly liquid assets to back up a one-for-one relationship with the US dollar. So here's my opening question to you, Brock. As Terra and Luna were melting down, wiping out billions of dollars in value, were you, A, crying, or B, laughing?
Neither. I was paying very close attention, and I'm not someone that watches the market minute to minute.
But you couldn't help but notice that one.
Well, I had to watch it. It was the single largest negative event in our industry. When Mt. Gox collapsed, that was a smaller event, bigger relative to the overall ecosystem, but this is a massive event. It wiped out $50 billion of value in a very short period of time. And there's no question that it's going to have additional sort of ripple effects, though it was largely contained. It hasn't impacted the rest of the ecosystem negatively, and it's worth noting that this was an experimental algorithmic stablecoin, and the problem with this experiment is that people put too much trust in it too soon. It hadn't weathered a downturn. It hadn't been through a negative cycle, which is why things being battle-tested for a sufficient amount of time matters. And in the end, every one of these events is ultimately hardening, battle testing the overall ecosystem. I still believe in algorithmic stablecoins. I believe there is a place for them in the future. A stablecoin that is disconnected from, call it, legacy financial infrastructure. But in the meantime, we are stuck with Tether as well as USDC and some of the smaller stablecoins like DAI.
As you're well aware, a lot of crypto skeptics, including central bankers, are pointing to Terra and the stablecoin contagion that has accompanied it, because some other coins did suffer, and saying, I told you so. It's all a house of cards. Mike Novogratz, whom I assume you know well, he's the CEO of Galaxy Digital, perhaps Wall Street's best-known crypto enthusiast, and a big supporter of Luna and Terra, called it a big idea that failed. Was Terra just a big idea that failed, or was it a house of cards, or is that a distinction without a difference?
Well, I think there were no negative intentions here. I think it was an experiment that got too big, too fast, and fundamentally it had a flaw. The first algorithmic stablecoin, which is where the idea of Tether came from, my partner in Block 1, or EOS, Dan Larimer, with Charles Hodgkinson, had started a thing called BitShares, and they had BitUSD. Some partners and I were the largest token holders. This is back in 2013. And I recognized pretty quickly that you could depeg this thing and break the system. And so this was a concern that I had related to Luna.
That could have been a Freudian slip.
Intentionally, I like to have fun with words. And so, this is one of those events. And obviously for Mike Novogratz, he sent out his big shareholder letter this morning and pointing out the tattoo that he had put on himself like days before this event occurred. and it will act as a reminder for him, to stay humble.
An indelible reminder. By the way, the tattoo is of a moon to signify Luna and a wolf howling at the moon, and if I'm not mistaken, it's on his left shoulder, and it is not small.
Yes, it will be a reminder. And so this is.
Why do you say that you're still a believer in stablecoins? Because algorithmic stablecoins, excuse me, because if you look at Tether, and again, I'll establish that Tether says it has assets to back up its one-to-one relationship with the US dollar. An algorithmic stablecoin, on the other hand, and let's just use Terra and Luna as an example. In that case, Terra was based on Luna, which was based on Terra. There was an arbitrage relationship between the two, which, in the cynic's point of view, is a circular relationship of nothingness.
And that's fair to say. I mean, what is the foundation upon which these things are being built?
Other than math.
Well, Terra, it was the idea. They did start buying a large pool of Bitcoin.
$10 billion,
and in theory, if they had built a large enough basket of enough diversified assets, in theory, they may have been able to weather this storm. The problem is, it is, as you stated, potentially a house of cards, because what it was Terra backed by. And the minute you start going into a rapid erosion of price, the whole thing can unravel very quickly, which is what we witnessed.
So how would another algorithmic stablecoin, and there are others, be different from that? Because if what you have to do is invent, as it were, enough value to be able to convert the price of the algorithmic stablecoin into something more substantive, like Bitcoin, let's say, that's sounds to me like a confidence game.
Well, if that confidence is diversified sufficiently, you have DAI. Their idea is to be at least 50% backed by a dollar-based stablecoin like a USDC or like a Tether. The question is, how much sort of fractional reserve type building can you do on top of it? I hope that we continue to experiment. My attitude, and I'm very agnostic toward all of these experiments, is if anyone succeeds in doing something that makes the world a better place, we all win. And the main lesson is is don't put that much confidence in something that is that new. You need these things to be in the wild and weathering challenging times. And still, back to diversification. I mean, the other point I think it's worth noting is during the whole Reddit rebellion and all the GameStop sort of things, there's the argument of the retail public should not be participating in the financial markets. One of the greatest things that's happened through experiments like this, what's happened through the sort of GameStop events, is that the retail public is learning how to invest in financial markets. We've always welcomed them to buy lottery tickets. We've always invited them into casinos. And the fact that the retail public throughout the world, specifically in the United States, is learning how to access financial markets and benefit from investing, I think is a wonderful thing for, call it, the collective over time.
Even if they collectively get left holding the bag?
Well, in life, we have to pay tuition. We learn our lessons, and often it's the hard way. But one of the lessons here is make sure that you're managing your risk sufficiently. Make sure that you don't have all of your eggs in that basket. Keep in mind that the reason why it got so big so fast is it was paying a 20% yield in terms of if you had staked it into effectively a savings account. That's the reason it got so big so fast, is it was paying out higher yields than anything else in what we call the DeFi market.
I'm so glad you brought up yields because, I, for the purposes of argument, likened Terra and Luna to a confidence game, but these algorithmic stablecoins are just a branch of what I would describe as an ambitious and somewhat bewildering new field known as decentralized finance, or DeFi. Now, another gentleman, a superhero of the cryptosphere, if you like, whom I also assume you know well, Sam Bankman-Fried, the CEO of FTX, recently described yield farming, which is precisely what you were just talking about, in terms that also make it sound awfully like a Ponzi scheme. I'll just ask you, is it a Ponzi scheme? Well,
I mean, certainly not by the definition of a Ponzi. What you have is people that are willing to pay a certain rate to borrow a digital dollar or a cryptocurrency, and because of the volatility in the market, people are willing to take out very short-term loans. And when you look at that on an annual basis, you see pretty high rates.
Sure, but in a world, and let's not forget that it wasn't very long ago that we were living in a world of zero interest rates set by central banks, and for the most part, negative yields on corporate credit around the world. In a world like that, 20% yields are, on the face of it, absurd.
I agree with that.
Right? Unsustainable. They have to be.
I didn't have anything there for that reason. I was uncomfortable as someone that's been around the space for a while, deploying capital into that product.
So for those who see these highly appealing yields on offer from algorithmic stablecoins or other DeFi projects, what's your word of advice? At what point is the yield simply too rich to be believable, to be credible?
Well, part of the problem is that the market was also being subsidized by call it the Terra Lunas of the world, in the same way that venture capitalists subsidize products and services, whether it be your Uber Eats, your Postmates, your DoorDashes. They're basically contributing capital to bring food to your faster because they think there's equity or enterprise value being created in that customer base. The same thing was happening here, which is where there was a natural, call it yield, that was there in terms of the demand on the buy and the sell side, and then it was being subsidized by the underlying, call it the entrepreneurs or the business operators.
What about the token that you co-founded, Tether? It is the biggest stablecoin in the world. It has a current market cap of about $75 billion. It is, as I mentioned, supposed to trade 1-for-1 with the US dollar, but in the midst of the Terra meltdown, it dropped to 95 cents. So I'll liken it to a bank account. If I went to the bank and went to withdraw my $100 deposit and was told, I'm sorry, Erik, it's only $95 now, what's the lesson therein for me?
Well, that was a flash sort of crash that happened for all of a moment. It certainly wasn't sustained. Yes, that's not a positive occurrence, but it immediately recovered. So there's an order book and market depth, and the presumption is that someone just hit the sell button and we got an anomaly out of it. Clearly that happening immediately following what happened with Terra Luna clearly sends a very negative message to the market. Though that Tether is doing, what, $50 trillion a year in sort of transactional volume. It's the most traded cryptocurrency in the world. I think that, we'll see what happens. It played a critical function. You needed and one point I like to make with, certainly in the US as we talk about this, the digital dollar, whether it be Circle, Tether, or whomever, has about 97% market share in, call it the new economy, these future monetary rails. The US dollar is the reserve currency in all crypto transactions, which I think is a very good thing from a US perspective. And I like to remind US legislators of this fact.
CZ would agree with you, I believe.
And I think that's a very good thing, as we think about our collective future, as we are moving through this fourth industrial revolution and digitization, modernization of all things is occurring.
Another criticism, Brock, of Tether is that it offers only limited transparency into the billions of dollars in assets that back the 1-for-1 peg. And maybe that made sense at some point in the past, that lack of transparency, or if you prefer, opacity, though I'll be honest with you, I can't really understand why, but we'll leave that alone for a second. What about now? That's the question I have for you. Does concealing Tether's assets and calling them a secret sauce make sense any longer?
I don't think so. It's worth noting that I started the business and I left in 2015 and relinquished all my ownership in the business, so I have no role or benefit from the business at this point. When I was there, we published all of our assets in real time. 24 hours a day, you could see the total balance and
whether it be U.S. Treasuries or commercial paper or whatever. And
so I'd say that, the logic as to why you wouldn't do that is, and this was a concern, call it the financial institutions in 2016, 17, and 18 that were holding these reserves sometimes would impose a rule saying, we don't want you to disclose that we're your financial institution, that we're your bank. We don't want our phone ringing with every cryptocurrency startup. So there were some things that prevented them. I don't know if that's still the case today from doing so. One of the promises of cryptocurrencies is the idea of a world that is more transparent. So I naturally, philosophically side with the view that there should be far greater disclosure. There should be financial audits from a Big Four accounting firm. I know going back 5 years ago, the Big Four wouldn't audit you. The financial upside in taking on these clients wasn't worth the risk, or the amount of money they would have to charge wasn't feasible for the client to pay. But I would think at this point in time, considering how the Big Four are all seeking credibility in the space, they would probably take on a client like that, even at a favorable rate for the notoriety it would earn them.
It's fair to say many people remain reluctant to own cryptocurrencies or transact in cryptocurrencies because of the volatility. Your history with digital currency goes back to the late 1990s, but for argument's sake, let's date crypto as an industry to Satoshi's Bitcoin white paper back in 2008. You've said that as crypto matures, it should become less volatile. At 14 years old, it's not exactly an adult, but it's also not a kid either. So it's somewhere on the way to maturity, yet we've never seen as much volatility as we saw last week. What does that say?
Well, I think we're seeing a lot of irregularity in the broader financial markets. This is not limited to crypto. And what we've seen with crypto historically is when the markets are up, crypto is up even more. When the markets are down, crypto is down even more. Higher highs, lower lows. And that's also in defiance to one of the promises of cryptocurrency, which is that it's meant to be an uncorrelated asset class.
Or
it's meant to be a store of value.
Right? Something that's actually...
Which we're not seeing yet.
Yes. So if, again, I'll make reference to the fact that we are talking about crypto fulfilling its promise. When does crypto fulfill that promise? When does it stop being pro-cyclical? When does it actually become a store of value? And what is the catalyst, if you will, that allows it to become that?
Well, if you had asked me a year ago if I thought crypto was going to break free from this correlation with, call it the legacy financial system or the traditional financial markets, the old economy, I would have said if you added war, inflation, and all of the events that are occurring right now, would it have decoupled? I would have said highly likely, and I'd be sitting here wrong. So what has to happen for that event to occur? Probably something very bad at this point that none of us want. For the time being, it appears that there is going to be a direct correlation between the old economy and the new economy. And in the same way that we see large cap cryptocurrencies like Bitcoin and Ether fall less during downturns and rise less during upturns, and the smaller caps have bigger fall, that's likely to continue to be the pattern until it's not. And at this point, I'm not sure what it will take.
NFTs, non-fungible tokens, are arguably one of the first real-world use cases for crypto besides unregulated money transfers. But even some of the most credible voices in crypto, and you know them well, say that 80 to 98% of NFT projects will end up being worthless. No VC firm could survive with a track record like that. What should we make of NFTs?
Well, this is a lot like, it's probably not the right analogy, but back to like the 1990s and Web 1.0. Yes, the vast majority of these things are going to fail because the barrier to entry to create a new NFT product is so low that everybody is attempting to do it early on. It's a gold rush, and it's art in most instances. These are art or community building sort of projects, membership sort of clubs. And a lot of it isn't very good. A lot of it is speculating like on the IPO market of 1999, except for anyone can take their art project or membership community public. And
how do you know how do you recognize an NFT with enduring value?
Well, I look at it like art. Whatever it is, the moment you buy it, assuming that you're never going to see any liquidity out of it, and make sure you're happy with it on your digital canvas on the wall, or whatever community or club you're joining, make sure that's a community you want to spend time with. And certainly, I wouldn't invest heavily in the space, though I'm a huge, huge believer in the long-term value that it's able to provide.
Crypto was supposed to break down access barriers to financial services. It was supposed to take out the legacy rent takers, like commercial banks and title insurers. It was supposed to give people control over their own digital identities and so much more. When is crypto going to fulfill that promise?
Well, I think that we are seeing these things happening. It just isn't, from 0 to 100. We are absolutely seeing large numbers here in Latin America of people using this technology for things like remittance, and we're seeing it. It is happening. The fundamentals are there if you check. In terms of identity, this is an area that I'm very interested in. And this is where the idea of what Web 2 is and what Web 3 is. There was a lot of hope and promise around what the internet was going to be able to do for us. Web 2 was effectively the capturing of all of that potential around big tech, monopolized sort of feudal lords. And what Web 3 is attempting to do is to demonopolize those businesses, to turn those businesses into public utilities, where all of that data, our data, ends up in a public ledger or database where anyone can create an interface. And if you think of the most valuable commodities historically, it went from gold to oil. The most valuable commodity today is your data. Data is the most valuable commodity. The idea that we can take ownership of our identity, to be self-sovereign effectively on the internet or on the web, and to then have to provide consent to our information being used and to enter into an agreement with anyone that's accessing that data where we can be a financial beneficiary from its use, I think has tremendous promise. And I think that this might be the answer to some sort of universal basic income type of system in the future. I think identity is going to be the big topic of conversation throughout the remainder of this and next year. As that sort of next event, we've gone from DeFi to NFTs. I think identity solutions will be a big topic of conversation through the remainder of this and next year.
Brock, I want to finish with this. You're not just an entrepreneur involved in such a dizzying array of projects, I can barely comprehend it. The man lives a schedule that you couldn't believe either. But you're a politician, or a would-be politician. You have run as an independent for president, and you have registered in the race for senator in the state of Vermont in the United States in the upcoming election, November 2022. Are you going to run? I'm not sure if this has been established yet, so I want to know.
Well, I'm on a listening tour right now, and clearly I'm listening pretty far from Vermont. In terms of whether I choose to go full bore this election, first of all, I'm running as an independent, which means I'm not in the primaries. So the primary cycle is August in the state of Vermont. I don't really have to make a decision until, let's say, July 4th. And so I'd say we'll have a pretty clear indication as to what I intend to do by U.S. Independence Day.
And for those who want to know, would you describe your politics as what? Are you a libertarian?
No, I'd say I'm an American. I'm very moderate. Almost every Democrat I know thinks I'm a Democrat. The Libertarians think I'm a Libertarian, and the Republicans think I'm a Republican because I think...
You're a chameleon.
Well, I agree with everyone on a number of issues. If you looked at this as a Venn diagram, generally most all of what we are overlaps, and we spend most of our time focused on the part that doesn't, when we actually have so much in common. And if we spend time first finding the areas in which we can agree on things, it's much easier then to have the conversations about the things in which we don't. And I personally believe that we have to transcend partisan politics in the US right now. It's become so divisive that it's led to an environment where it's us against them, it's red versus blue, and I don't think that is a path forward. I think we have to remember that we're all in this together. We're going to win together or we're going to lose together, and we have to find a way to work together, whether we like it or not. And I hope, if nothing else, the message I continue to deliver reminds us of that fact.
Well, that is an inspiring message and a perfect note on which to conclude our conversation. Ladies and gentlemen, please join me in thanking Brock Pierce.